Shifting focus to South Africa then, the country's central bank will redraft its risk scenarios for the next rate setting policy meeting on 26th of March, which essentially comes after the widening of the West Asia conflict that has pushed the oil prices up. The central bank is now scheduled to meet on interest rates after keeping its main lending rate unchanged at 6.75% in a split decision in late January. The policymakers back then wanted to see inflation expectations fall further. The South African rand has weakened to 16.82 to the dollar following the West Asia crisis. According to the South African Central Bank Governor, it was in the January meeting. The baseline was set on the basis of an optimistic scenario and an adverse scenario. Bank had assumed average oil price for the year to reach $75 per barrel and the rand to weaken to 18.5 to the dollar. The crude prices currently hover above $100 per barrel. For more details, our correspondent Calden Ongmu has sent us this report from Johannesburg.
All eyes are on oil prices as the Middle East conflict shows no sign of easing. The geopolitical standoff is already translating into economic consequences. For South Africa, a weaker local currency, rising oil prices and mounting inflation risks could hit households and businesses sooner than expected. Reports suggest the country's central bank may withdraw its risk scenarios ahead of its March 26 rate-setting meeting. Experts warn the Israel-Iran conflict could weigh on the economy, potentially halting interest rate cuts and pushing up transport and food prices. On the politics side, analysts say Pretoria may also face renewed pressure over its support for Iran, compounding already strained relations with Washington and heightening sovereign and corporate risk. This is Calden Ongmu from Johannesburg, South Africa for WION World is One.